Bitcoin rises above $36,000 as 24-hour crypto liquidations pass $500 million. Bitcoin, BTC, edged higher after Wall Street opened on February 24 with Russia's Ukraine invasion and its aftermath still top on market's agenda. BTC used 1 hour candle chart, Bitstamp. Source, TradingView. Risk sentiment set to be dominant driver in crypto. Data from Cointelegraph Markets Pro and TradingView showed BTC/USD nearing $36,400 on Bitstamp 2 hours after the opening bell, up $2,000 from its recent lows. Skittish markets faced the music from Russia's overnight incursion into Ukraine, a move that continued and ricocheted across global trading. Russia's stock market unsurprisingly faced a different level of trauma, with MOEX losing 50% and at one point halting trading altogether. Bitcoin, suffering earlier in the day, nonetheless staged a respectable comeback. At the start of the week, escalating tensions between Russia and Ukraine had hit crypto markets hard. Our crypto indices were already showing sizable losses across all sectors, Sahil Sakrani, a market analyst at crypto research firm Hive, told Cointelegraph. Sakrani warned that the announcement of further sanctions against the Russian economy may exacerbate the situation anew and that Bitcoin's correlation to traditional equities markets should not be overlooked. Now the news has worsened with an apparent Russian invasion of Ukraine followed by the EU, UK, and US proposing further sanctions against Russia, he continued. Risk aversion is likely to be the dominant theme for markets. With the correlation between Bitcoin and Nasdaq picking up again, broader risk sentiment will likely be the dominant driver of crypto markets. A second bone of contention came in the form of the United States Federal Reserve potentially slackening key rate rises due to the conflict. Perhaps the hashtag Fed is relieved that hashtag Russia invaded the hashtag Ukraine as now it has an excuse not to raise interest rates in March if it was in number 39. This it would in number 39. They've been something else, but as far as excuses go this one in number 39, hard to top. Hashtag gold spiked 1.5% and hashtag Bitcoin dumped 5.5% on the news. Peter Schiff, at Peter Schiff, February 24, 2022. For popular trader and analyst Pentoshi, however, such a theory seemed out of place. If you have an impending recession W rates at 0 and inject more capital you get something worse. Stagflation, part of a recent Twitter update argued. On the topic, economist Mohamed El-Arian said that such risks come at a time when Fed policy flexibility is limited and liquidity can be patchy. Liquidations pass $500 million. The day's events meanwhile sent derivatives funding rates well into negative territory as traders weighed the likelihood of more downside. Related, last Bitcoin support levels above $20,000 come into play as BTC price faces time of uncertainty. Data from analytics source CoinGlass confirmed the action, along with cross-crypto liquidations reaching $530 million in 24 hours. Bitcoin futures funding rates chart. Source, CoinGlass. Heavy selling by shorters was thus in evidence, research firm numbers added about the data.